Hey traders, and welcome back to Trading the Dream, your go-to channel, of course, for all things trading mastery. Now, today we have a special treat for you. We're going to be diving deep into an exclusive interview with none other than Richard Bailey, the mastermind behind Axia Futures' groundbreaking training programs. Now, a quick little introduction on Richard. He is a seasoned trader and of course educator, and he started his career back in 2007 with a discerning eye for technical patterns and a passion for innovation. And of course, his ability to recognize these patterns and continually develop new technical and fundamental trading ideas has benefited many who have traded with him and of course studied under him. This proficiency in generating new ideas and understanding what it takes to build a career from scratch has enabled Richard to create many trading development skills-based training programs. He delivers the career courses which have been built by drawing on skills and ideas from all the successful traders here at Axia Futures in order to give traders the best practices to further enhance their trading careers. So get ready for a behind the scenes window of insights and of course revelations that will keep you on the edge of your seat while we peel back that curtain like never before, uncovering the secrets and of course philosophies that are transforming ordinary traders into titans of the trading industry. Buckle up, hit that subscribe button, and get ready to level up your trading game. So, Richard, thank you so much for taking the time to sitting down here with me today. It's fantastic to have you here on the conversation. Of course, I've been learning from you for the last 6 weeks in the 6-week career program, and I just thought it would be really, really good to get some other aspects to the career program, and of course you and the whole educational hub of Axia Futures as well. So, I mean, let's kind of start from there. I mean, can you tell us a little bit more about your journey in trading and how it really led to your current role here at Axia?
Well, I probably started in a reasonably traditional way. I wanted to be a trader from a pretty young age, well, that's probably slightly non-traditional. I don't imagine there was too many 13-year-olds out there who are like, I want to be a trader. And I'll be honest, I didn't at the time want to be a trader as such. I remember having a conversation with my dad and him saying to me, because obviously like most young boys, I wanted to be a footballer. And I think me and my dad probably realized at 13 I was not going to be a professional footballer. And I remember him saying, if you want to make some good money, go and work in the city. To which my head was like, I've seen the film Rogue Trader. It's putting on a flashy jacket and shouting some stuff. So realistically, actually, I kind of more thought I wanted to be a kind of broker. I wasn't quite sure exactly what you did, but I thought I am interested in this. I want to know how these types of things work. So having set that in my mind, that's what I want to do. I went and did the traditional thing and did economics. Went and did economics and law at uni, and then again did traditional thing. I saw an interview with Andy Braveheart recently, and him saying the same, that basically he then went to try and get jobs at banks. And I felt it came up against all these tons of people who'd been to top universities, and I didn't really know where to start. And unfortunately, back then as well, I think banking was a bit of a closed shop if you lacked connections. I'm not from a very privileged background, so I didn't have those. So started looking around and discovered prop trading. And the more I looked into it, the more I was like, actually, this is what I want to do. This is trading in my eyes. So I started off as a grad in 2007, like you said, and spent that first the first year, so all of 2007, trying to get live. And essentially, training was quite limited. It basically 2 weeks of, right, these candlestick charts, this candle means this candle means this, here's some patterns. Profile, we just got told, this is a profile, the letters match up with times. And that was about it. So profile just disappeared. I was like, yeah, don't need this. Don't know what it does, really. Get rid of that. And the other thing that was really emphasized was trade news, which is quite interesting compared to what you see nowadays, where people are very much told, don't trade news. News is really bad for you. It's dangerous. It's volatile. Pretty much this was hammered in at the beginning. Trade news, it's the most important thing to do. And at the time, I saw the end of it, but you could actually play the game of being the fastest person in on the news because there weren't so many algos there. So my trading career started off as basically learning some reasonably simplistic technical patterns and trading news. And so what I kind of had to do was try and work out, well, how do I do this well? What I mean by that is, well, how do I do this better than other people? Because anyone can trade news. You can all click away as payrolls later on today, and you can all go and bash the button on payrolls. But how do you do this in a way that you can feel confident that you can perform most of the time on it? And that was really what sort of started my whole framework around trading, essentially. And the framework was predominantly around simple technicals where I'd learn little patterns, generally leaning towards more sort of directional breakout type style patterns. So little flags, things like that, breaks of lows, those types of trades. And the other bit was around news trading, and I've still got it. I've got them in boxes in my loft of write-ups on every single bit of data that came out, payroll, CPI, GDP, durable goods, everything. I got a little book of all of the previous ones. And what that was all about was doing something that other people weren't doing. So what I was able to do, and it sounds silly that no one else was really doing this, but people weren't. But what I was able to do is go, okay, I know exactly what to expect on payrolls trading this market. And that gave me not a huge edge, but it gave me a little bit. And that was enough to get going. So I would say initially, very much. I was a fundamental trader with a sort of technical lean, if you will. And that then progressed over time. 2008, we got to see the immense volatility, which was hugely beneficial, hugely fun, but long term was slightly detrimental. Now I'll explain that in a minute. But it was a great time to learn. And something else that I think is always underplayed in trading, and people never talk about this, is luck. And I'm not saying you need to be lucky. And I don't like the phrase, you create your own luck. You can't create luck. Luck by itself appears out of nowhere. But what I really learned was you have to take that little bit of luck that comes your way and make something of it. Because the luck, for example, people would have heard this before. The luck that I got was the Fed cut interest rates 3 weeks into being live for me. Now, everybody else in the room heard that as well. It wasn't my personal luck. It was lucky for everyone that came out at this moment in the day. And it was completely unscheduled. So total surprise. And I looked at that and went, you've got to go for this. This isn't let's see what happens. This is you absolutely full size this and you max out on it. And I did. And that for me was the slice of luck that enabled me to then start to grow. I'm not saying everyone needs something like that, but one of the things that I really grabbed me was you've got to take your chances when they come. And that provided me the chance to then grow and learn as a trader. So that was kind of how I sort of got off the ground. And like I said, the 2008 volatility was a bit of poison chalice. It was great to learn. And for those who have started perhaps 2020 or 2022, volatility was immense. There was opportunities constantly throughout those 2 years. What that enables you to do is take chances. You can have a go at something, because if it doesn't work, you'll get 5 more chances later on today. When volatility falls, you don't get that, and you have to adapt then to the volatility and the idea that, well, you're going to have to plan a trade out very well, accept it may not work, and accept that also you're not going to get the chance to make up for this, possibly for a few hours, possibly for a couple of days. And that was quite a hard thing to then deal with as 2012, 13, 14 came along, which is where I really realized the idea of, well, I know everyone says you've got to learn to adapt, but I don't think anyone, again, takes that too seriously until you have to adapt. And if anybody sort of said to me, what's something really important for a new trader? And what I would say there is, if you're doing all right, you've started off, you're starting to make some money, constantly drive to find new trades, new ideas, learn new things. It's so much easier to learn stuff when you're doing all right and making money. The hardest thing is when times have changed, your earning capacity is halved, and now you've got to try and find something to recoup that. That's a really difficult thing to do because the pressure's on. And the pressure is on in the sense that you're now just looking for anything that might be a trade. And that was something that it took me a while to kind of deal with and essentially get over. My ego was burnt in 2012 when, year on year on year from 2008, performance just went up and up and up and up and up. And suddenly it didn't. And that was really hard to take. And it was a big kind of slap in the face and the big realization that, you've not got this nailed. And no matter how good you think you might be and how provable that might be from past performance, it doesn't mean you're going to stay good forever. And that was where I really sort of thought, you've got to go and learn something new, which brought in profile. It brought in a far wider fundamental understanding. Because my fundamentals I always felt good, in the sense I've got an economics background, I understand a lot of it, but really that only boiled down to trading data. So I then sort of went, right, well, you've got to understand the wider fundamental story of how central banks operate, how even things like OPEC work. That was just I don't need to deal with OPEC. I've got my data, I do that. But having this far broader kind of view. So essentially that was the bit where I kind of realized that I need to expand all of these things out. You've got to be a more rounded trader, which also brought me to the education side of things. One of the things that I gained from Alex joining Axia was they started up, joining the previous firm that I was at, which is Futex. I'm not going to go into the story there. I'm sure people know it. But when Alex joined, he brought about what was essentially the embryonic stage of Axia. And part of my contribution to that was doing sessions with younger traders on certain subjects, which was great for me because it forced me to really, I didn't have to understand anything anymore necessarily. Like, central banks was one of the things I did. Profile was one of the things I did. But what I had to do was actually explain why I do certain things. And that really makes you think about how much you genuinely know what you're doing and really where your edge is, which for me was huge because I suddenly, not only had a better understanding of what I do, but so much more confidence. Because if you can explain something to somebody and then go, look, this is when you do it and look, it works, your confidence goes up because it's not just I thought that was a good idea, so I got in. The structure of the explanation was massively beneficial. So that was what sort of got me into enjoying the education part of it, which then rolled over into coming over to Axia in 2017 and being tasked with putting together the whole 6-week program, which is where me and you met recently. And that was put together in collaboration with a lot of other traders and taking bits and pieces that they do, their ways of approaching things. But it was important to be about a framework of growth throughout rather than a kind of prescriptive way of trading. And I really despise that kind of methodology where it's like you do this and it works, because it doesn't. Quite simply. if I was still trying to do what I did in 2008, it would not work. I'd be sitting around achieving nothing, doing tons of round trips, trying to take trades on that just don't work. They'll come round, they'll recycle round, but there's nothing prescriptive about trading. Trading's the capacity to keep on growing ideas and to have a framework that goes, do you know what, this is a bad idea right now, you need to move on. But if you can't explain why you do something, you can't understand why it's not a good idea anymore. So
adapting is like such a key element to it.
And for me, the adaptation comes down to your ability to be able to say, well, I know what I do. Because if you, I guess you take anything, it's like if you've got a bike and your bike doesn't work, well, if you know how a bike works, you can see what needs fixing. But if you don't know exactly how a bike works, or a car or whatever, you don't know how to fix it. So therefore you're stuck in a situation still trying to make do with something that doesn't work, with no ability to change it. And that's the adaptation. It only has to be incremental. You're not wholesale changing what you do. You're just picking the bits that no longer work so well and changing those out. If your tire pops on your car, you don't buy a new car, you change that bit so your car works again. And it's that kind of thing. And it's just realizing the things that are working and aren't working. That to me is adaptation. And constantly bringing in new ideas and new things. Which is, again, something I kind of emphasize to people on the 6-week program about, well, what you need to do is take this information, which in my view is everything you kind of need to be able to trade, but you don't need it all at once. You need to start and go, right, well, this is what I can do now. And all of this other information you can bring in when you understand where you need it. And that's something that you always need to think about when you're growing as a trader. You'll never know everything, and you don't need to. You just need to know enough to get going, and then you build from there. Which that's how I started. It was playing 1 minute flags and selling the low because it was a high volatility falling market. You just sell into the low, and that was a trade. And then you realize it doesn't work, and you go, okay, well, what do I do now? How do I play a reversal, for example? So that to me is adaptation. It's about steady incremental growth rather than just going, I got to change and do something new.
And I think that's so important, such an important key takeaway, just that alone, what you're saying. And I mean, I noticed it as well with when I was in the career program, and I mentioned it on other videos as well, which was for me, out of all the weeks, the 1 week that really gravitated to me the most, because everyone sees things differently. Some people might really love and gravitate towards the sort of macro week stuff, and some people the profile. For me, it was the profile. Like, it was like just I sat in that week for me, and it was like butter, and I really enjoyed it. It was like I was really enjoying it because I was really immersing myself into it. And then came along macro week. and exactly where it's going, because it's like you said, right, where you started off and how things are now. A lot of people run away from news and data, and that was me. When I had my training wheels on, and in ways, very many ways I still have them on. The one thing I used to do as a retail trader at home was, the minute that there was NFP, CPI was coming out, or whatever it was, I was running a mile. I wasn't, I was like, I'm going to leave, because I've been burnt too many times, because I just basically just had no idea about how to trade it, or how things impact something else. And so I would walk away from the markets and come back a few hours later and wait to see the market kind of figure itself out again. But then when I sat there, in macro week, it wasn't that kind of smooth as butter kind of gravitation for me, but I knew this is something that I'm going to really need to learn, and I'm going to really want to learn. And I actually mentioned it in the video that I think is going to be coming out before this. So actually, you can check out the top right corner of your screen, viewers. You can check that out, and that's my review over the 6-week program, where I said, my biggest strength and my biggest light bulb moments were with the profile course, but my strongest weakness, and I like to use those words, strongest weakness, because it's not a weakness, and I don't want to focus on it as a weakness. It's the strongest part of the lower end spectrum of my mental understanding with data and macro stuff, is that, and these are the two things that I'm really trying to really revisit a lot of the things that we had in the 6-week program and go back to, because I know, again, I'm going to need to adapt, I'm going to need to move, and I'm going to need to bring that into my game, and I'm really looking forward to doing that. And having you being the mentor and the coach, and sort of seeing us through it, and having that constant access to, through the discords and stuff like that as well. It's great to know that, it's not a one and done kind of job and everything else. So I'm looking forward to that adaptation and moving forward and moving along. So let's
go on.
Yeah, sorry.
No, I must say I quite enjoy that. That's one of the things I enjoy about the course is people, one, sort of clearly gravitating towards certain things. You can kind of see it with different people, what the stuff they love, but also people's questions. Just the fact that somebody goes, all right, well, what do I do in this situation? How do I do this? And to me, it really shows that people are taking it in and crucially asking themselves, how do I turn this into a trade? How do I make this something rather than just simply, okay, take it in? And I think if you don't question stuff, you don't genuinely take stuff in. But so thanks for the questions as well during the course.
You're very welcome. I mean, that for me was a key thing. I mean, especially when there was something that I really didn't understand. And again, another attribute I really loved about the 6-week career program. And I know I didn't really want to focus too much about the program itself in too much detail, because there's so many other things I want to ask you in so little time, and I don't want to take too much of your time out of this. But I mean, the other thing about the 6-week program is not just the amount of content and the lives that we were doing with you every single day, and the interactivity on Discord and everyone throwing the questions. Even if there was times where I couldn't ask a question, or it didn't occur to me to ask a question, someone else would ask something, go, oh yeah, that's interesting, I want to know the answer to that, and that kind of constant learning really helped things along the way. So incredibly put together. Just so thank you
no worries
for that and more. I want to touch into the training philosophy now, actually, Axia, because as well as being part of, if not one of, and if not the best proprietary trading firms globally, Axia has this unique, top of its class, incredible reputation in this trading education space. What would you say are some insights into the core philosophy that sets Axia Futures apart from that side of things when it comes to the training and education?
Okay, so one of the things I mentioned already, that it's non-prescriptive. It's not this is how you do it. One of the things that I've also always tried to emphasize to people is the kind of concept around understanding the mechanics of what goes on. I often feel that people don't necessarily understand the mechanics of what is actually happening in a market. Why does it go up? Why does it go down? So understanding those sides of trading, which I think are often overlooked, because it's so easy to get a chart up and say, well, this happens, therefore this happens. And that's really easy to do. But why that happens, what does anybody know? And so then you've got to look at, well, why are these things? And so having that deeper understanding of why does a market do something? That kind of question of, well, why would somebody sell it here? What would their motivation be? You might want to buy, but why somebody want to sell? Because if you're going to buy, someone's got to sell to you. So that kind of understanding of the interaction between different traders is crucial. In terms of the sort of structuring of the sort of ethos behind how we step it forward, to me, it's about sort of building up the ability first up to decide what you want to do and where. And I've kind of mentioned this concept. I view it a lot like a map, if you will, trading. A chart is like a map. A chart tells you places that you can go, places that you've been, and essentially gives you options. It doesn't tell you what to do. Like a map, it just says, well, you could go any of these places. So that then gives people very early on the ability to make a decision. After that, you give them a profile, because now what it does is that gives the map, kind of relief, if you will. It shows you whether a market is going to be quick, whether it's going to be slow, where it's going to spend time, where it's not. And so this then allows you to kind of understand the context of, well, what do you expect on the map? Is it a narrow single track road? Is it a motorway? And so it gives you that little bit more depth of information. It's about building information up. Nothing can be done individually, and everything's got to be a kind of combination of things. So people who get too stuck on an individual tool get trapped because they're using one tool to do something, and it doesn't matter how good your map is. If the road's blocked, the road's blocked, and it doesn't matter if your map says it, you can go down there. So profile then gives it that kind of bit more color in terms of information. And so it's then a building up of, well, can I make a decision? What do I expect when I've made a decision? And then finally, should I do it? Which is the execution side, the price ladder, a footprint, the bit that says, when you're looking at your map and it says turn left, well, you look left and you see there's a massive hole in the road. That's the bit that you don't know until you get there, and that tells you this isn't a good idea. And that's what a price ladder or a footprint's about. It's about saying, yeah, you like the idea, it makes sense, you know what to expect, but when you get there, it might not be that. And so therefore you need to readjust, you need to change your idea. And that's something that if you've got that ability, then you don't go into a trade thinking, well, I've got something here. The chart says buy, so I'm buying. It might say buy, but you've then got to ask yourself, is this actually a good idea? And so that's the first part of being able to make a decision as a trader, which is often something people don't do very well. I think they more go, right, well, it says do that, I'm doing it, or I've seen this before, so therefore I'm doing it. The ability to make a decision. And I reference as well a few times the idea of what I call you can't have your cake and eat it trade. And that's the idea that when you get to a point, let's say a level, market moves up, right? What are you going to do when it gets there? And the people who say, well, I might sell it, but I might buy it, you've created a problem for yourself immediately, because now you don't know which to do. You must have an objective of what you expect to happen. It'd be like getting to a T-junction, you say, well, I might turn left, I might turn right. Surely you know which way you should go when you get there, and so you do that. And it's the same principle there. And so having that ability to decide what you want to do, you get to the level and you said, right, I'm going to sell it when it gets here. Your choice now is sell it or don't sell it. And you make it binary. Otherwise, your choice is sell it, don't sell it, or buy it. And now it's very hard to decide which one it is. And it's very hard to have conviction. Now, it's something I kind of emphasize to people as just a very simple kind of checklist that you've got to have. So that's the first bit in terms of what do you do? How do you do it? How do you decide what you want to do? The next part is the bit that I feel separates Axia from others, in the sense that most, I think, will just leave it there and go, well, now you know what to do. Now you know some patterns, go and do them. What you've got to overlay on that is an understanding of fundamental narrative. And you don't have to be an economics whiz. You don't need to know any economics. In fact, I've said this before to people, younger people who've said, well, what would you do if you want to be a trader? I said, don't do economics. You don't need to. Do psychology.
Yeah.
I think that's a far more important thing. Do psychology and probably something like engineering or physics, something like that, because it gives you a concept of mechanics of how things work and why people do the things they do. But by the by, so the bit that separates us is, one, the big focus on fundamentals and the idea around, well, how do you construct a narrative? How do you know right now what's important to markets? Because people can come up with various different things, but what do the markets really care about at the moment? And what are they going to react to most importantly and most dramatically? That's where your opportunity is going to lie. So that's part of the concept of week 4 of, understanding central banks, understanding how to trade data, but also understanding, well, how do you know what's relevant? Because inflation will not remain relevant. Going into 2024, inflation is probably going to fall. I say probably. If it starts to rise, then it becomes relevant again. But if it continues to fall, it pales into insignificance and something else becomes the story. And it's your ability to recognize that kind of change in fundamental environment that gives you the capacity to go, okay, I know what I want to be doing now. I know where I should be trading. I know what ideas I should be having. So that's the sort of week 4 part, which I think most people are never taught. And most people, rather than even try and learn it. Just go, well, it's volatile, it's dangerous, I don't want to do it. And my argument to that is always, well, if it's volatile and dangerous and someone's losing money, somebody else is making money. So you just got to work out how to be that person.
Exactly.
You don't have to be an expert. You just got to have to be one of the people making money, because it's a zero-sum game. So if half the people are losing, half are winning, how do you get into that half? That's all you've got to do. You don't have to be the best in the world. You don't have to be the genius. You've just got to be in that half. So that's week 4. And then the final couple of weeks, again, are things that people believe they should do, but don't necessarily know how to do it. And that's around the idea of, how do you develop new ideas? How do you effectively debrief what you've seen and understand what you've seen, rather than, you know, putting some charts on a PowerPoint, Evernote, whatever you want to do it on. That doesn't teach you anything. That just collects information. You know, you're not trying to create a history of markets. You've got charts, that does it for you. But what people do is they do that and then don't do anything more with it. And crucially, you know, part of it is about, well, how do you turn that into new ideas? How do you turn this into a new way of looking at things? How do you recognize a good run coming to an end? Because it's doable. It's very doable. And you will have all the information at your fingertips. It's just people don't know how to use it, and they don't grab hold of that. And that's what those couple of weeks are all about structuring what you do outside of the trading. You got to remember as well, people spend, I would suggest, 80% of their trading day not in a trade.
Yeah.
And it's that, what are you doing in that 80% of your time? Because I think a lot, there's a perception that we're all just chilling, probably watching TV, feet on desks, all of that kind of. And that's not the case. Yeah, it's about, are you going and exploring a different approach to something, reading up on something, knowing what to read up on? That's the kind of bit that we bring into those final couple of weeks, and allow the new people to actually get their trades out there and get perspective on it, get question on, well, how would you do this better? What other things do you need to know? How can this be improved in any way? And that's one of the concepts as well, around asking the right questions. If you ask good questions, you'll get good answers. And just asking the questions, just simply about, well, what else do I need to know? And that comes full circle back then to, well, you've got all that information, and now you know the other bit that you need to bring in. And so the whole idea is that it creates this full circular framework that allows you constantly to grow over time. You don't get to a point of being an expert by just learning everything and doing it. You do it through iteration, through experience, through working out what you need to know. That's the idea behind it. That people also become self-sufficient, which is vital to any trader, I think.
I mean, going back to what you were saying about there's those 2 weeks, especially being vital, and where you mentioned about not that 80% of the time when you're not in trades, that really kind of sparked something in me now as well, because I actually done a video on routines, which was inspired by, if I'm not mistaken, week 5 on the Monday or something. It was right. And that was like I knew the whole, you're not going to be coming in and spending all day at a desk clicking in and out of trades, because as we know, that's a recipe for so many disasters, right? And it's just that's not the reality. But when you put the point of having a structured routine, I've got it on my wall next to me on my desk. And it's the time that I wake up, it's the 3 wins of the morning that I do before I even get to the office, right? And actually, funnily enough, before the day with you about the routines, Alex came in talking about morning rituals as well, so I kind of amalgamated the two together. And I've spent time in the office before the market even opens, of prep, overnight news, and all that kind of preparation before, and I only give myself 2 main chunks of windows of trading throughout the day, between 10 and 1, for example. Then I have an hour break to walk around, because we're sitting down all day anyway, and get some lunch in, and then look about what's going to happen in the cash open in the States, and what data were coming out. And again, more prep, and you know, it just that 1 week for me not only was, of course, just inspirational, and it made me think about things differently and actually improve my trading, but it's just another notch to say how much value someone can get from these, this 6-week career program for a start, because it's not just about, oh, you're going to come in, you're going to learn how to press, buy, and learn how to press sell, and if this happens, then that, right? IFTTT. It doesn't. That's not the way. And other than the interactivity, the discourse, the lives, the content, being able to take away these other aspects that one wouldn't necessarily think about, bringing that kind of professionalism into trading. So having that whole ethos, and you just now describing all these different steps along the way is it's great for people to see that side of it, because it's such a huge difference. I mean, I'm not going to sit here and say I've done loads and loads of courses, but I have done quite a few, when I was doing CFDs and Forex, and again, it was literally that, if this happens, this is a pattern, this is a flag, this is a whatever, if this happens, you can do this, you can do that. And there was no feedback, there was no interactivity, there was nothing else. But with this, it's not even that. You have this whole dynamic of serious work that gets put out, and it shows with all the traders here at Axia. And I think that's the main thing. And Alex mentioned as well, because when I interviewed him, the whole idea of training the traders. And like I said in the introduction, I put here, Axia's philosophy, one of the philosophies is transforming traders into titans here, and creating these traders and having that fundamental work through. So yeah, that's brilliant. I'm gonna stop chatting now about that, but you get the idea. And I mean, that brings me over to we were talking about news and data and stuff, and moving on. I want to actually jump forward a little bit and go into common challenges and misconceptions about trading, because obviously, oftentimes trading is very, very challenging, and there are many misconceptions, especially thanks to all these YouTube gurus out there, right? Turn 500 quid into 10 million, etc. All that stuff. What are some common challenges that you've observed in individuals pursuing trading, either full-time or as an additional income stream? Have you seen any? Have you got any kind of anecdotes that you can align with that?
I think there's a few misconceptions. There's certainly a couple of anecdotes. Certainly in terms of what you shouldn't do, I think is probably a good thing. But one of the main misconceptions that I think people get stuck on is the idea around consistency and what is meant by consistency. And people look for essentially consistency to be very high win rates, essentially not losing. Now, that's virtually impossible. And I'm sure this isn't the place that it comes from, but there's a certain amount of arrogance about believing that you can't lose. The basis of that being, right, you're in a market with who knows how many other people doing, if you're trading S&P, 1.5 to 2 million contracts traded a day. You've got to be more right than almost all of those people, almost all of the time. Now, to genuinely believe that you can do that is either misunderstanding trading or unbelievably arrogant, in my view. And it's something that often gets talked about. You've got to drop your ego at the door, and you do. You have to accept that you're not the best person in the business. No matter how good your training is, you still won't be. And also, you're going straight into the lion's den. You've got to have enough to be able to get by, right? And that's all you need to do. So you don't need a massively high win rate. Most traders have around about somewhere between about 45 and 50% win rate. That's completely the case across almost every trader at Axia. There may be a couple of exceptions, but the exceptions will be as many that have a high 70 plus win rate. As many of those people, there'll be people with a 25% win rate. And it's about what you do in the trades that matters. And I think people forget that. The other element of it as well, which leads on from consistency, is people focus so much on, I want to achieve an average P&L of, let's say, 500 a day. And people are like, well, if I can average 500 a day. Now, one of the key parts of that they miss is the assumption they're going to make 500 every day. Now, that's not going to happen. Yeah, you will really struggle to find a trader that has a month of up days in a row. And in fact, you'll probably struggle to find many that have a week in a row. You're not going to achieve it. But where people do go is they're like, well, if I can make 500 a day, and this is one of the things that the sort of YouTube gurus do. If you make 500 a day, that makes $2,500 a week. That's 10 grand a month. It's 120 grand a year. Wonderful. And all you've got to do is make 500 a day. Now, the problem with this is that's an average of 500 a day. But let's assume you're also going to lose 500 some days. You're also not going to make any money on some days. So actually to achieve that level of an average of 500 a day, so 2,500 a week. I would say realistically on an average, just a normal update for you, you've got to be hitting somewhere between 1,200 and 1,500. Yeah. And that's the reality of it. And if you can do that on a normal update, accepting you're going to have down days of equal measure, then you'll probably just about manage 2,500. And that's the reality of trading. It's one of these things that people misunderstand. And so what they do is that leads to people limiting themselves. And that's the other thing that people make the mistake. They do, and I see this with so many people. I've seen this with people in the past. Oh, if I just stop at 500 and go home, you can't go broke banking profits. You can, because over time your costs eat into that. A bad streak eats into that, and now you can't recover it. And that's something I've seen people kind of just drift out of the industry, not because they don't consistently make money. They've probably got as good a win rate as anybody else, but they just don't make any good money on the days that are set for them. And essentially what someone's doing there is saying, this is the greatest opportunity I'm ever going to take or ever going to get, but I'm just going to take the minimum. I only want that bit. And this is a job where, unlike any other, you can choose to get paid less. So what I mean by that is, like, I'm sitting here in an office that got built. The person who built the office gave me a quote for it. He didn't then finish it and go, do you know what? Just pay me about half of that. I had to pay him the full amount. But in this job, you can go, this is how much I should get paid, but I'm going to optionally only get paid this. And that's where people make a mistake. They don't push it. In terms of things that I've seen where people have gone wrong, and there's a couple of people in the office in Cyprus who will know this story. Look to the older guys, the ones with a little grey hair now, and ask them. But there was a person in our group when we started who was the star of the group. And they did very well. They sort of exploded out the traps, did really well. And the problem that they had was a lack of willingness to exit a trade. The willingness to accept this isn't looking good. So instead, they would average and they'd buy more and more and more. And generally, you get away with it. And this will happen. People can get away with that. The problem is the day that you don't. And that was the problem. And it was General Electric earnings. I remember this really clearly. General Electric earnings in March 2008, I think it was. And General Electric at the time, massive company. Not so much anymore, but they were the second biggest company in the world at the time. And their earnings were down, not drastically, but their EPS was expected 30, it came out 24. So it was a bit of a drop. And rather than accepting that, this is a reasonably big deal, and the S&P starts to drop, and they buy more and more and more and more and more, and ran out. They couldn't buy anymore. So they started to buy the FTSE. And rather than accept that actually this is a big deal, that General Electric, the second biggest company in the world, has had a massive earnings hit on their finance department. They're not a finance company. That's where all the losses have come from. These markets are telling you something. They're not coming back up on this. And it went down and down and down and down and down. And unfortunately, that was the end. and they never came
Yeah.
back. And it's just that kind of thing, that having that humility to go, do you know what, I've really gone for this and it hurts and it's not a good situation to be in. If you don't give the idea up, you give your career up. And that's something that I've seen people make a mistake with. The other thing, good friend of mine tried too hard to simplify his life. What I mean by that is, very skillful trader, very, very well for himself, really understood order flow, really understood small patterns, all of those types of things. Brilliant. But then decided, you know what, I want to go and live my life a little bit more and do less of the trading stuff. So started to then try and automate ways of trading, trading data with stop orders, things like this. Right. And what it ended up doing was basically taking something that he's worked so hard on and he's so good at, trying to simplify it, and that costing him. And essentially it cost him his career. He to his credit, and this is something that I think all traders should also remember, have a stop. Have a point where you say, if my account falls below this number, I'm done. I'm quitting. Yeah. And he did it, and he walked away. And he's now a software developer and he loves his life. But essentially, he'd still be a trader if he stuck to the way he wanted to do things.
And that's a wrap. Thank you so much for joining us on this enlightening journey through, of course, the world of trading mastery with Mr. Richard Bailey. If you found value in today's discussion, don't forget to, of course, hit that like button, subscribe to our channel, and don't forget to hit that notification bell to stay up to date with all of our latest content. Hope you enjoyed it. Don't forget to click one of these videos to see what is coming up next. And until next time, happy trading.